Hello traders and welcome back. In this lecture, we're going to be looking at the Fibonacci. Okay, in our last lecture, that's on the module on indicators, I spoke a little bit about the Fibonacci tool. Okay, this tool. Okay, this is the Fibonacci tool. I spoke a little bit about it, and in this lecture, we are going to be learning about the concept behind the Fibonacci tool. Okay, so now we have what we call the Fibonacci numbers. So the Fibonacci numbers were discovered by Leonardo Fibonacci, who was an Italian mathematician. Okay, so this is the picture of the guy. He discovered these numbers. So what's so special about these numbers, right? The Fibonacci numbers are 0, 1, 1, 2, 3, 5, 8, 1, 3, 2, 1. So how did he come about these numbers? So when you look, the first number is 0. Okay, the first number is 0. The second number is 1. And then the third number is 1. So how they got the numbers is you just simply add the first number to the previous number, or the current number to the previous number to get the next number. So here we have 0 and then we have 1. So 1 plus 0 is 1. And then 1 plus 1 is 2. And then 2 plus 1 is 3. And then 3 plus 2 is 5. And then 5 plus 3 is 8. And then 8 plus 5 is 13. 13 plus 8 is 21. 21 plus 13 is 34. 34 plus 21 is 55. 55 plus 34 is 89, and so on and so forth. Okay, so that's how they came about. That's how he came about the Fibonacci numbers. So Fibonacci discovered that when you divide any number in the Fibonacci sequence by the first, second, or third preceding number, you get what he identified as a Fibonacci ratio, or the golden ratio. Okay, so by dividing any number by the preceding number, you tend to get a ratio. Okay, a ratio. So let's for example use 34. So 34 divide by 55. So what do we get? 0.168, right? So this is an example of a Fibonacci ratio. Now when we divide 89 divided by 144, what do we get? 0.168, right? Good. So when we divide 144 divided by 233, what do we get? 0.168. So this is one of the Fibonacci ratios. Okay, so this is a Fibonacci ratio, 0.168. So what if we divide 13 divided by instead of 21, then we make it 34, we then get 0.38. Okay, so it turns out that these numbers 0.168, 0.38, even 0.5, 0.236 are what we call Fibonacci ratios, or the golden ratios. Okay, they are the Fibonacci ratios or the golden ratios. So okay, for example, when we do 1 divided by 2, what do we get? We get 0.5, right? So this is 0.5, and just go on and divide them randomly. So we can just 5 divided by 21. What do we get? 0.23. Okay, 0.236. So it's basically approximately, it might not be the same, as it might not be very exact to every decimal point, but it's approximately this. So the thing is, the Fibonacci ratios or golden ratios mysteriously appear in nature, in biology, in arts, in architecture, etc. So that's one mysterious thing that he found out. So these ratios, they appear everything. And in the next slides, I'm going to show you how they appear in nature, in architecture, and in all other phenomena. Okay. So one other thing is the Fibonacci ratios were later discovered in stocks and forex price charts, and it's one of the most powerful tools used by traders in predicting future directions of an asset. So someone discovered that these ratios also appear in forex charts or in stock charts. Okay, they discovered that these ratios appear in financial charts, and they are very powerful, and they were able to develop a very powerful tool that many forex traders all around the world use in their technical analysis. So I'm just going to go go to the next slide. Okay, so the next slide shows us Fibonacci numbers in nature, right? So how do we get this? When you take, for example, your arm, or let's just say your head, for example. So you now take the height from here to here and then divide it by the height from here to here. You get the Fibonacci number. And with different parts of your body, even your DNA, even your mouth, take here to here and divide it from here to here, you get a Fibonacci ratio. So even your DNA, this is an example of a DNA strand. Okay, so they were able to measure the length and breadth of the DNA. So they measured this as 34 and this as 21. They have a specific unit of measurement which is called the angstroms. Okay, so this is 34 angstroms height, and then this is 21 Armstrong length. Okay, so if you divide 34 divided by 21, what do you get? 0.168. Okay, 1.68. So if you look at a tree, okay, and look at the branches, the way everything has been arranged, you tend to see that they follow this particular sequence. So for example, we have one branch here, we now have two branches here. Here we then see that we will now have 3 branches, and when we go to the next level, we then see that we have 5 branches. And if you look at trees, if you look at plants, if you look at flowers, you tend to see that they follow this sequence. It's just a natural phenomenon that is quite mysterious. Okay, that is quite mysterious. If you take the length of your arm from here to here and divide it by the length from here to here, you get a Fibonacci number. Okay, when you get your length or the height of a human, okay, from here to here and divide it by the height from here to here, you get a Fibonacci number. If you get the length from here to here, okay, and divide it by the length from here to here, you get a Fibonacci number. Even your eyes, even your arms, and so on and so forth. So that's the mystery of the Fibonacci sequence. So they even came up with this tool. They call it the Fibonacci spiral chart. Okay, and how did they come up with this? Let me just explain how they came up with this chart. So this chart was created like this. So they just got a kind of grid. They got the grid with equal boxes. Okay, they just got the grid with equal boxes. So they just came and, let's say they chose the first box here. So this represented 1, then this represented the next one. Remember, there are 2 1s, right? There are 2 1s. There are 2 1s, right? What I mean, the first one and then the second one, then we have 2, right? So they now represented them in boxes. The next shape, we then have 2 boxes. 2 boxes here, 2 boxes there, making a shape like this, right? Okay, so this is 2. Now, the next one, we have 3. Now we have 1, 2, 3, 1, 2, 3. And then they make the shape like this. So we have 3. Now, the next number is 5, right? 5 number. Okay, and then we then have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. You now drew the box like this. The next number was 8. Now the next number was 8. You count 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Now you have, and so on and so forth. Just depending on how big your grid chart can take. Okay, so here is 13, here is 21. If the space was enough, we will just keep going and going and going. And then what they did is they connected this spiral drawing from one edge to the other. So from one edge of the triangle or of the square shape to the other. So as you can see, this is what they did to get the Fibonacci spiral chart. Okay, so what's special about this Fibonacci spiral chart, right? Now, coming back to our slides, when you look at phenomena like this, like nature, okay, like arts, you tend to see that these natural forms tend to follow the Fibonacci spiral chart. So if you look at this, it tends to follow the Fibonacci spiral chart. Look at this this image of the galaxies. It tends to follow the Fibonacci spiral path. spiral chart rather, and then this also, all of these are natural things, okay, things occurring in nature. Okay, so this tends to guide beauty and tends to guide nature and so on and so forth. So look at this artworks that also follow the same principle. Now that's the end of the chart. You can also do more research on it to understand more about the concept of the Fibonacci. But our concern right now in this video is to see how to apply this principle to the forex market and then see how to make right trading decisions with them, right? Now, coming on our chart, what happens is that when we are in a trend, remember we spoke about trends. And let me just look for you. Okay, let's use this guy here. Remember we spoke about trends, okay? And we came to the understanding that a trend creates higher highs and higher lows. Okay, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, right? So this is the way the market typically moves. So traders have discovered that when the market creates the impulsive move and then retraces, it tends to retrace to a Fibonacci level. So that's, for example, if we are to measure this distance as 100, all right? So when the market trends upward and it retraces, it tends to retrace to a Fibonacci level. So it tends to retrace to, let's say, 61% of this or 50% of this. Okay, remember we have 0.16. 0.16 is 61%, and then 0.5 is 50%, 0.38 is 38%. Okay, in this case, it's 38%. So over time, traders have come to realize that these three Fibonacci numbers, the 0.618, 0.5, okay, and 0.38 are the most powerful numbers, and price tends to retrace to them. So when a market is trending and there is a retracement or a correction happening, prices have higher chances of retracing to either of those three levels. Okay, in fact, the main levels are just 0.168 and 0.5. Okay, so whenever prices hit these levels, there is a very high chance for the trend to continue moving. Okay, the trend to continue moving. So as you can see, it came here. This is most probably a Fibonacci level. Then this is also, and this also. So let's just look at how to use this tool, right? Let's look at how to use this tool. So in order to use this tool, you need to identify a trend that is happening. Okay, you need to identify a trend, and let's just use this place as an example. So just take the tool. This tool can also be found in your MT4 trading platform. Okay, this is it. This is the Fibonacci retracement tool. So this is the tool here. So you can also come and select it here, but I'm just going to use the trading view platform. Sorry. So when you select this tool, you need to identify the first point and the second point, right? So in this case, a point like this will be the first point, will be point A, and a point like this will be the point B. Okay, let me just delete all of this. Okay, so let's assume the market is coming like this, or let's just, draw it on a clean slate. So let's assume the market came up and then retraced. So in this case, this will be point A, and this will be point B, right? So you are then expecting a point C, right, for you to enter in order to catch the trend upwards. So that's what you are expecting, but we've not seen the point C yet. So what you then do is you take your Fibonacci tool, click on point A and drag it to point B, and then release it. So that's what we're going to do here right now. Sorry. So let's just select the Fibonacci tool, and then let's assume this is point A and this is point B, right? Let's just use our text tool. Where can I get this is our text tool. So let's make this point A. Let's use A. Okay, and then make this B. So this is point A and B, right? Now we are trying to get another point, which is point C, so as to enter for a continuation of the trend. So all we then do is take our Fibonacci tool and come on point A, click on point A, okay, and then drag it to point B, okay, drag it to point B. I think I made a mistake here. So just click on point A and then drag it to point B. Now you see that it's on point B. Now this 0.00% has to be on point B, okay. Now you leave it on point B. Now we are assuming that we haven't even reached here, okay. We are just looking at from here to here, and the retracement haven't occurred. We are not looking at this other part. So when you drag it from point A to point B, all you then need to do now is just look at the 50 and 60% and 61.8% retracement levels. So when you look at these levels, you tend to see that market came to these levels. The market came to these levels. Look at what happened here. Just like magic. The market came to this level, tested these levels, and then continued rallying up. Okay, so that's the mystery behind the Fibonacci tool. So that's how it works. That's how it works. So let's just assume that this is a trend. Okay, let's assume from here to here. From here to here. Now this is point A and this is point B, right? Point A, point B. Now look at point C. This is a 50% Fibonacci retracement level. So it came here and touched this 50% and continued. So these two levels, the 50% and the 61%, are very powerful levels that traders use a lot. Let's just go to lower time frames where we will be able to see the market trending properly and see many more examples. Let me just use the daily. Okay, good. So as you can see, we have the market trending like this, right? So let's take a look at this level, point A to point B, right? So select your Fibonacci tool, hit point A, drag it to point B, and release it. Now what do you see? Look at it, just reached the 61.8% retracement level and continued selling up. If you go down and even try to use the level on even smaller retracements, you tend to see that it follows the same rule. So let's assume this is point A, and let's say this is point B, right? Point A to point B. Now what happened? It came to the 61% retracement level and then continued buying up. In fact, the accuracy of the Fibonacci is very outstanding. It's very astonishing. Now look at point A to point B, right? From this to this, what do we see? We see that it came to the 50/61.8% retracement level and continued buying up. Let me try from here to here. As you can see, it came to 50% and continued buying up. Let's use this here to here. You can see it came to 61%. It hit 61% a bit and then continued buying up. This also occurs in a downtrend scenario. Let me look for a good example. Okay, so let's assume this is point A and point B. Okay, point A and point B. Now, what do we see? The market came, hits point A, retraced to from point A, hit point B, and came to the 50% retracement level to form point C and continued selling. So the Fibonacci tool is very powerful tool. Now, in this uptrend, I'm very sure we're going to get even more examples, right? Even more examples. Let's just draw the trend line to see. Now, picking the Fibonacci tool and draw from point A to this point, for example, what do we see? It came to 50 and continued buying. Let's use, let's assume this is point A and this is point B. What happened? Came to 61 and continued buying. So the market always retraces to a Fibonacci level. So you see, it came from point A to point B, hit point B, then retraced to 61% and continued buying. So all you need to do is to just get a trend and identify the trend properly, and the Fibonacci level will continue being in your favor. As you can see, it came here, okay, made it to 51% and even came all the way up and continued buying and reached this point, created a double top, and then came and broke structure here. So it broke the trend line, okay, which formed the basis for this higher highs and higher lows, this uptrend, and it broke it, and then we now know that the trend has officially changed. So from here on, we will just keep looking for sell opportunities, right? We can draw from here to here. You can see that it came to 50%, right? It came to 50% and continued selling. And we also see that I think we have a head and shoulder. We have a head and two shoulders, right? So this will have been a very good good opportunity for us to continue selling. We have here to here. Then we see that the market came to this point, which is 50%, and continued selling. So all the examples we've seen so far have worked out perfectly. Okay, like this, and here this will be a 38 point. This will be a 38.2 level. Yeah, I told you there are 3 levels, right? But 38.2 rarely occurs. So this could have been the level. And so it just hit the 38.2 level and continued selling. So the Fibonacci levels are very powerful and very reliable. So it's a tool you should be very conversant with. Just go on your own and try to use it on your own to see how it works. Okay, I'm using this one to here. You can see 61%. Yeah, you can see 61%. So that's it for this lecture, and see you in the next. Bye.